6th of 5th of June 2023 of options trading. Bank Nifty closed on Friday at 43,880, and the plan today, like whatever analysis we did, the results showed that it was an expected gap up opening with around 44,100 to 200 of range. If we look at the chart today, did happen it did open up with the first candle closing at 44,211 first 15-minute candle, and it opened around at 44,102. So yeah, that was pretty much a good indication or good analysis that we went through. The VIX predicted value of VIX was around 10, like it will fall down and there will be low VIX, and the market was supposed to trend sideways with small candles, no much movement, less margin. Since the reason of this was like yesterday was Sunday, so there were lesser global cues. So now we will learn more and trade less. That was the plan. So yeah, we proceeded accordingly. The market opened, shot up, so showed a indication that it will go up. But if we look at the broader time frame, it more or less stayed put. It stayed like sideways. The trend overall was sideways with a little bit of downslide at the end of the market. I had moved out of the market before the ending, so I'll get to that. So now getting on to the first uh, start of the day. Like the first ping was around at 9:07 when Zerodha gets the first ping. The Bank Nifty spot was around 43,907 with a VIX of 11.13. So the market opens, first 15-minute candle close, and we took a call sell trade. We took a trade of call sell for 4 units and balanced it by PE sell at 43,700 and call at 44,700, with respective hedges. Okay, so this was the move that we made. Okay, by then we balanced the call from 2 is to 1, where we sold 2 units of call and 2 units of put. From there we got to the ratio of 4 is to 3, and the market was going up, like sustaining above 44,200, as you can see here. Even here also it was going around at 44,200 and something like that. So yeah, that was pretty much an indication that the market is not showing any decisive call, so we balanced the call and put ratio sell. uh, okay, then again this thing kept sustaining. I got to know that the that there were no news as such in the market. Okay, there was no news. Probably the market was looking for some sort of news to get a trigger point from where it will shoot up or shoot down. Okay, that was the logic, but we waited, we held our positions, and yeah, it was not going anywhere. Like all the charts are like dots. If you look at a smaller span of time, like even at a 2 minute even at a 5 minute candle, this thing was going static. Yeah, this was the static region. Yeah, it was like more or less a sideways movement, as you can see in the Bank Nifty charts or index. Now this is often termed as the exhaustion pattern, where the trend is always sideways, and the VIX was low at 11.10. Okay, so yeah, I had set up a put alert through Zerodha at around 44,250, and it did notify me around uh, say this point when the 44,250 crossed. Yeah, this is the point where it notified me 44,200, this candle. But there were no as such directional bias, so I decided not to do anything about it and wait for it. The reason being, like, there is a thing called which my expert told me, that a Black-Scholes formula. The Black-Scholes formula actually determines the option premium pricing and all. And there is another parameter which I got to learn today, which was the gamma. Like, where from the expert I got this idea that whenever the gamma breaks out or goes up, the call gives a good profit and indicates an upward shift in the market. But nothing of that sort also happened today. So yeah, the key insight for this point is that market will only break out or break down and show a clear bias with any news or trigger point, because that was not happening. So yeah, so it was trending sideways. Okay, so I was supposed to keep a lookout of for the day high and low breaks, like for any high or low break. Suppose if the chart is trending upwards, this is the high that holds the support. So if this broke, like for here, this broke but then again corrected back, this broke here but again corrected back. So if it sustains, not in the 5-minute chart but in the 15-minute chart, if it sustains, that gives a good confirmation about the high. As you can see, this is the point where it reached the high, it never crossed the high again. So yeah, that was the indication that I had and notion. And then based on that, I didn't took much trades, because in a market like this, over trading can be a strong reason for losses. So avoiding that. So this is the chart which I took as a screenshot, and pointed out the highs and the lows. And yeah, so if this low, suppose the chart is going trending downwards, then first we look out for this particular low, which serves as the first support for the index. And then if this crosses, then this is and sustains, then we can actually get to the point where it indicates that the market will fall down. But then again, the next point of support is the second point. And likewise for the higher highs also, the first high is the first support point and the second high is the second support point. So likewise, I was planning to make my next move, which was not you know do which was not sustainable at this point of time, because we didn't get any decisive candle as of now, as of that point of time, till 1 p.m. Okay, the VIX was also around at 11.09 and 11.24, like that, like not much. Anything more than 12 can be a good indicator that the uh, uh, market is going to take a decision, or it is going to trend, be it upward, be it downward, but it is going to trend. But there were no such indications. So yeah, so we held the positions and set these following alerts, where I explained it a bit, so that if the first low breaks and then sustains, then we will shift our buys according to the market. As I have said in my earlier videos, that we should react, not predict. So um, we were supposed to react depending on the shift of the candlesticks. Yeah, that's pretty much it. And yeah, I got a new higher low mark around 44,175, which was sustaining here. Like this low, this is the lower low, and this is the higher low. So these are the 2 points which it gained, as you can see in the chart of the 15-minute candle as well. The here and here, these are the two markers. Okay, so that's pretty much it. And around at 2 p.m. there was no movement whatsoever. VIX was also low, so I was still in profit. So that's why I booked profit for 1200 bucks. Not much, but then again, the strategy was to avoid losses in this kind of market, because had it been over trading done, had any form of extra trades done in this market, then it would have given me a lot of losses. Okay, so at this point of time, at the next point of time, I was thinking to buy a call option at the money 44,200. Sorry, this will be 200, not like that, 44,200. But I didn't do, and waited for it to fan out, because this particular green candle was forming back then. But then again, I thought it might be a bit, so let it sustain a little bit, around over 225, or 44,225, or 44,230. Let it close a bit. This is again the 5-minute candle. So never 5-minute candle can be an indicator, but not a 15-minute candle actually gives confirmation of the market bias. Okay, so next is yeah, I was pretty much spectating like what happened or not. So yeah, this vehement move of the candlesticks, often with larger wicks, is often marked, can be indicator for like stop loss hunting, which goes on, like everyone will be close to the spot here. So a little bit of shift, like even 50-100 point of shift might hit stop loss. So maybe few of the larger players in the market were stop loss hunting. Yeah, that must be going on. And around 2:30 the spot was lowest, not the day lowest, but it went to a steady fall, and then there was a green candle building up which maybe indicate an indication of panic buying. Then again, it's just my idea for now. So yeah, yeah, that is a good decision that I made, that I avoided the call option buy, because that would have eaten up all the profit, the little bit of profit that I have made today. That was pretty much it, because then onwards the market showed like two big green candles, but this was not again 5 minute candle, so an indicator, not a decision, but it corrected itself and went down and down and down further. So that was pretty much the day movement for me. I was just being an observer of the chart. I'm still trying to grasp the idea. Even I had a discussion with my expert, and the same thing happened. He suggested me for me to stay put and don't overtrade and all. So I followed those rules, and around at day 307, let me go to the 307. Yeah, this part, the day low broke, and bank nifty index fell around 3 to 315, which was like too late into the market. In 15 minute nothing would happen, so pretty much our initial prediction stayed the same. Like it opened around, the bank nifty opened around at a high, and then it maintained a sideways bias and then corrected back itself to its square one position, which was the previous day high. Okay, so yeah, let's see what happens next. Tomorrow is Nifty expiry, so probably we will be having a trending market and get some good trades. And for today, the main learning was like, do not trade in larger quantities for sideways market, and panic selling and buying can give few trends, but we should wait for them to solidify. Not, don't take any action just based on 5 minute candle, because it's just an indicator, not a final decision. And one thing and one more thing, nothing is sacrosanct in trading. So we have to be patient, despite, if even if the profit is less, it doesn't matter, but we should always strictly avoid any form of loss, especially in these kind of market, because a little bit of upshift or downshift, we might mistake that this is a trend and then take up some trades and lose money over there. So we need to avoid that. Yeah, that was pretty much the learning of today. And yes, even in this fiasco, I made a good profit of $1200. So yeah, I am happy with it. Okay, that's it for now.